your parents give you 1,000,000 francs, or if you inherit from them when they pass, how much tax will you really pay? Let's say you live in Zurich and your mother lives in Germany. She gives you 1 million. In Switzerland, it seems tax-free, but you will still owe thousands every year. And in Germany, there is a big tax bill right away unless the money is given step by step over time. Stay with me. I'll show you how this works and how planning ahead could save your family 70,000 euro. Hi, I'm Aysha AG. I'm a cross-border investment specialist in Zurich, Switzerland, with 20 years in finance and a background that spans New York, Dubai, Amsterdam, Munich, and the UK. On this channel, we dive into the financial questions that matter most to high-earning expats and anyone managing their finances across several countries. And I get messages all the time that some of you didn't realize you didn't subscribe to this channel. So if you could do me a favor and double check that you are subscribed to this channel, that would be tremendously appreciated. This is the free thing that you can do if you have an interest in learning more about optimizing your finances as an expat to grow a large retirement portfolio. Obviously, it also helps making sure I can keep this channel alive and continue to make the time to create these videos. So please double check if you're subscribed, and thank you so much. Today, I want to look at what happens to a Swiss resident, so someone living in Switzerland, when this person receives a 1 million gift or inheritance from a parent living, specifically in this case, in Germany. Because obviously the rules are different depending on the countries involved. And this is a special case study about that very specific situation to give you an idea of how things work. Before I jump into it, just a disclaimer. I'm not a licensed tax advisor in Switzerland or Germany. This is a general overview for educational purposes only. For your specific case, you might want to consult a qualified local tax advisor. And to make it simple and also more relatable, let's follow the story of Patricia. Her mother, who lives in Munich, Germany, gives her 1 million euro so that she can go ahead and buy a home in Switzerland, and she can also use that to grow her portfolio, invest, and prepare for retirement. So I want to look how this gift is treated in Switzerland from a tax point of view, how it's treated in Germany, and really understanding if there is any kind of overlap between the two countries. For someone who lives in Canton Zurich, there is no tax for a gift or an inheritance from parents to children. And this means that Patricia doesn't owe anything in inheritance tax or gift tax for this donation in Switzerland. Now, she does need to announce the gift as part of her tax filing, because otherwise the tax office will question why she has all of a sudden a big jump in assets. Now, I will tell you that once I received a gift from my father, which was sizable, and I didn't know any better, and I didn't declare it with my tax declaration. And they didn't actually realize that the first year, but it came about later on, and then I just came clean. I said, yes, I received that amount from my father a couple of years ago, and I could show the bank transfer, and then they were fine with that. So the Swiss tax authority is actually quite nice. If they see that you are being fair, that you didn't know something and you rectify the situation, or at least they see that you're not trying to hide something, they will be quite accommodating. But the point is that when you receive a donation or an inheritance, you need to declare that as part of your taxes. And so it's great there is no inheritance or gift tax in Canton Zurich and in Switzerland in general for Patricia. However, this gift tremendously increases her total assets, the total assets that she owns. And in Switzerland, residents have to pay wealth tax every year on their total assets. And before this gift, Patricia had managed to grow a portfolio of her savings and investments, totaling approximately 1 million Swiss francs. And now that she receives this 1 million euro gift, but for the sake of simplifying the calculation, let's say she receives 1 million Swiss francs, now her total wealth jumps to 2 million Swiss francs. And Zurich applies a progressive rate for wealth tax, and the rate depends on how much in assets you have and can go up to 0.6% of your assets per year for those with really a lot of money and assets. And as you can see in this sample calculation for Canton Zurich, if we assume that she lives in the city of Zurich, she doesn't have any religion, at least she didn't declare it, good for her, she doesn't pay church tax then. And then we put the annual income is 0 because it's not relevant for this calculation. And we put here a 1 million in net worth, which is the sum of her total assets. Now, after she receives the gift from her mother, that means that her net worth grows to 2 million. And with that, the amount she pays in wealth tax jumps to 6,027 Swiss francs. Because remember, the rate is progressive, so the more assets she has, the higher the percentage she pays in wealth tax. And so, yes, she doesn't pay any inheritance tax, but every year she will pay 4,000 Swiss francs extra on wealth. And so this is something that we don't really realize when we inherit, but it does make a difference in the total amount that we pay every year. Now let's look at what happens in Germany. And so in Germany, donations and inheritance are taxable and they are based on the residence place of the donor. There is an exemption though of 400,000 euro every 10 years. And that means that if your parents give you up to 400,000 euro every 10 years, every time donation is made, there is no inheritance tax or gift tax due in Germany. However, anything that's in excess of that within a 10-year bracket is taxable, and in the case of parents donating to children, is taxable at a rate of 15%. And in a case where Patricia's mother gives her 1 million euro, then the first 400,000 is free of tax, and then the next 600,000 are taxable at 15%, which means that approximately 100,000 euro in tax is due on that donation. Now, in practice, by law, the person who receives the donation is liable to pay the tax. In reality, what often happens is that the person who makes the donation pays the tax in addition to the donation. And then in terms of legalities, the person who received the money and the person who also gives it need to report within 3 months to the authority and file a form to notify the authorities that this donation has taken place. And that's even in cases where the amount is below the 400,000 euro tax-free allowance. And in the case of Patricia, even if she doesn't live in Germany, she lives in Switzerland, she still has to notify the German authorities of this gift. And when we look at cross-border tax issues and situations, it's always important to verify whether there are any clauses covered inside a bilateral tax treaty between these two countries. And in this specific case, there is no special clause or offset. And so the reality is that in Germany, there is gift and inheritance tax that is due. And in Switzerland, there is no tax on inheritance or gift. However, then this increases the assets basis for the wealth tax on an annual basis for Patricia as she receives that gift. And so here is what is important to grasp from this situation. When you know the rules, when you understand that you can get a tax-free allowance from your parents in Germany of 400,000 every 10 years, then it can make a lot of sense to plan inheritance and donation over time, over the years, so that you can make sure you decrease the taxes that are due in Germany, considering the 400,000 euro allowance. And this is the kind of things that you need to plan in advance. You need to understand the rules, and they differ for each country. This is the case between Germany and Switzerland. But obviously, depending on where the gifts especially is coming from and where you live, things will look different. And it's important to understand the rules and any cross-border agreement that the countries might have, so that you can, with your parents, with your family, plan accordingly and make sure you can preserve some money, keep it in the family and invest it for your retirement rather than paying it out to the tax authorities. Big amounts, in this case, 100,000 euro, which you will agree can come in quite handy at retirement time to buy a property and especially to grow it as part of a portfolio that is long-term. That makes a very big difference. And when you know what to look for, you can plan in the best way possible. Because if Patricia's mother had first gifted her 400,000 euro and then waited 10 years to gift her another 600 or so thousand euro, then 400,000 euro would have been exempted twice and only about 200,000 would have been subject to the gift tax, which in this case for this amount would only amount to approximately 11%. That's about 22,000 euro in tax instead of nearly 100,000 euro in the original scenario. That's the power of planning, keeping more money in your hands and in your family's hands and out of the tax office. And if you want more tips, go ahead and subscribe to this channel. You can also check the resources I share below in the description. And I will create many more videos like this about the financial challenges that high earning expats and those otherwise living in a multi-country context face. And I definitely want to share cross-border information that's available pretty much nowhere else. Thank you so much for watching, and see you in the next video.